Hello and welcome to Money Matters, or should I say, Money Matters. Today is the first in a series of talks about reverse mortgages. We'll be talking to Mike Sloan. He's a reverse mortgage advisor. And there's a lot of misconceptions and a lot of fears about this product called reverse mortgage. I'm Pat Kazakoff. Stay with me. So Mike, what exactly is a reverse mortgage?
So Pat, a reverse mortgage is, think of your regular forward mortgage where you paid the bank money, it loaned you money, you paid them money every month until that loan was paid for, and then the loan was closed out,
I own the house.
You own the house. In a reverse mortgage, the exact opposite happens. You own the house or substantially most of the home, and the bank pays you.
The bank pays me.
Yes.
And why does the bank pay me?
Well, the bank has made you a loan in paying for this, and the bank makes money off the interest on the loan. It's just giving you the value of the house in reverse.
So what circumstance would there be that would make me take out a reverse mortgage? I know the circumstance that would happen for me to take out a mortgage.
Yes.
I want to buy a house. But what would the circumstance be for me to want a reverse mortgage?
Circumstance would be you need more income, for example, or you'd like to get the value of the home into the bank or into your hands or have access to it before you left the home. So, let's say you wanted to pass the home along to your children. Passing a home along to kids after you've passed away is pretty difficult to sell. You have to do a lot of things to get a house ready.
So what I'm hearing from you is that a person who wants a reverse mortgage usually owns the house already?
They own it, but they don't have to own all of it. They can have a mortgage.
Is there a percentage of home that they have to own in order to qualify for the reverse mortgage?
That depends on your age, but a good reference point would be 50%.
So I have to own 50% of the house.
If you were about 62.
And my next question was, is there a minimum age that qualifies me for a reverse mortgage?
Absolutely. You have to be 62 or older to get a reverse mortgage.
So this is mostly for senior people?
Yes, it is.
So what happens, I go to a reverse mortgage lender.
Yes.
And I say that I want a stream of income, and that should be backed by the equity I own in the home.
That's correct.
That's the system.
That's the system.
Got it. And so why are there so many fears and so many misconceptions about this product?
Well, most people just don't know about it. Reverse mortgages have been around a while. There have been some rule changes that have eliminated some of the fears, and some of the fears were real. In the past, a couple would get a reverse mortgage because there's an actuarial component of the mortgage. The older person, typically the husband, would say, gee, we can get a little more in loan if we leave you, dear, off the mortgage. And people did this. It was a mistake, but they did this.
Aha, so instead of owning the home communally between husband and wife, only one person owned it.
No, actually they both owned it.
They both owned it.
But she was not on the loan.
She was not on the loan. So how did they both own it if she was not on the loan?
Well, they took out the reverse mortgage in his name and his name alone.
Aha.
They may have done some things legally to maybe move her off the title, but the end result is, men typically die before their wives. If the guy is older, that's even more likely. And what happened was the guys would pass away. The women, their wives weren't on the loan. The loan comes due. You're not on the loan, it comes due. So you saw these cases where, this older woman was, forced out of her home.
That's not a good situation.
And it's not a good situation. They've changed the laws so that now both parties have to be on the loan. She can be, or he can be, a non-borrowing spouse. But as a non-borrowing spouse, you get to remain in the home after the other spouse passes away.
So you're saying two people are on this reverse mortgage.
Yes.
They both own the reverse mortgage.
Correct.
Yes. And then one of them dies.
Yes.
What happens to the spouse now?
Still can use the loan. If she's a borrowing spouse or he's a borrowing spouse, everything goes along as it did before.
Can she stay in the house?
Absolutely.
She can stay in the house.
She can stay in the house.
Now, let's say you make this reverse mortgage for 20 years.
Yes.
Is there a typical time limit for a reverse mortgage?
No, there's no time limit. You can't outlive the mortgage. You can, if you, for instance, took payments over the course of 10 years, and you lived in the house for 20 years, well, after that 10 years, your payments would stop. All the monies that I'm going to loan you as a bank would cease. But you still own that home, and you're still entitled to be in that home until the day you decide to leave.
So why are there so many fears and misconceptions? Because listening to you, it sounds pretty straightforward.
Well, people think that the bank owns the house. I'm going to sell the house to the bank. No, you were the only one on the title. The bank has a lien on the title so they can get paid at some future date. But you own the home. You're responsible for property taxes and insurance. That's something that caused problems in the past with reverse mortgages. People, for some reason, may have thought the bank owned the home and they didn't have to pay their taxes. But even if you own a home outright, what happens when you don't pay your taxes?
So they can take it.
That's what happened to people.
So it's very clear that you have to pay your taxes.
You have to pay your taxes, insurance, and maintain the home.
Now, what about, we're talking about the misconceptions and the fears. Is this reverse mortgage, is there some sort of government assurance? Is there something that makes it sort of legitimate? Is there some body of rules?
Well, the HECM product, the home equity conversion product, is sponsored by HUD. The governments make really all the rules that we have to follow, and it's insured by the FHA. So as the bank, if I were to go out of business or for some reason could not pay you the funds that I promised you in the loan, the FHA would come into play and take care of that. So you're government insured here.
So can I go to does any bank have a product of reverse mortgage? Does any bank have that?
Most of the banks got out of the business a few years ago.
So why did they get out of the business?
It's more cumbersome dealing with seniors. When I typically work with a senior borrower or client or prospect, it's many, many visits to their homes, a lot of work. Now people can do almost everything regarding a loan online, come in and sign some paper, and they're off. But with the reverse mortgage, it's going to be an awful lot of time, and the bankers don't have the time for that.
So typically what I'm seeing is that your borrower, your person who takes out this reverse mortgage, he's got to be over 62.
Yes.
So he's a senior person.
Yes.
Typically. And then typically, how long does he take out this mortgage for? Typically.
Well, the whole purpose of the reverse was to let you age in place. So depending on the person's age, if they took it out at 62 and they decided they wanted to live in their home until the day they passed, that can happen. I'm finding people mostly in their early 70s do this. It's better for them if they did it earlier, but they stay in the home as long as they can. And with the reverse funds, they can use some of these funds to bring in additional care and help to help them stay in their houses longer.
So I'm going to go through a series of fears and misconceptions, and let's see how we do here, because I can see that the product, well, here's one. People are afraid that the bank will foreclose on their home and kick me out.
Well, I don't want to say impossible. Don't pay your taxes and insurance and you've got a problem, but it's not with the bank, it's with the town.
I was just about to say the bank won't foreclose, the government kicks you out.
The town.
The town kicks you out.
The town, yeah, and I don't mean to say anything bad about tax collectors, but the property taxes are through towns. The bank's deal with you is, I'm going to loan you these funds, we'll settle up when you leave the house. That's leave for 12 months, move, sell it, pass away. And you've got literally 12 months after you pass away to settle this.
I see. So it's 12 months. And your husband or wife can stay in the house after you pass away.
Well, if they're on the loan with you, they're co-borrower, the loan does not come due.
Is there a time limit? Well, so let's say you have a senior citizen and he marries a trophy wife,
Yep.
and but she likes the house, so he passes away at 80 and she's only 60. Can she stay for another 30 years?
She can if she were on that loan, if they were married at the time this loan was taken out, if they were legally married, and she was a non-borrowing spouse because she's under 62. And as a non-borrowing spouse, she gets to stay in the home, but she does not get to access any of the loan funds if there are any remaining at that time. But yes, she can stay in that house for another 30 years if she chose
So there's
to.
no time limit on her remaining in the house?
Absolutely not.
What about people, I'm afraid that I won't be able to pass my home along to my kids and I'm shortchanging them. What about that?
There's a philosophy there.
Yeah, because I've heard that from other people.
99% of the time, your kids come and they sell that house. So they don't want the home, they want the money from the home. Selling a house after someone passes away is pretty difficult. Takes sometimes years.
Why is it difficult?
You've got, the home may not have been updated. You may have to go through probate. There's all kinds of things that can happen. So it can be cumbersome, and you don't always get the best price for it.
So this is a little bit of a sentimental fear.
Yes.
It's a sentimental fear.
It's this, I want to leave something for my children, and my response to people is, if you really want to give them the value of the house or something, why not do it while you're alive? With the reverse mortgage, you can give them a substantial portion of the home 20, 30 years before you pass away. I think that's a lot better than giving something to someone after you've passed.
Well, or else the other way of looking at it is that the reason you're taking out the reverse mortgage, there's a reason for that, and that's usually because you want the income.
Yes.
You want the stream of income.
Oftentimes you need the additional income, and if your kids stepped up to the plate and said, gee, Mom and Dad, we're going to pay your taxes, and we're going to pay your insurance and your bills.
But they can leave you the house.
And then we'll leave you the house. But,
right.
And when they're not going to do that, Mom and Dad need some income.
So typically, they're not doing that.
Absolutely. The children aren't paying the bills.
I'm afraid that this is a loan of last resort and a sign that I failed in my retirement planning. Also sentimental.
Yes. This greatest generation feels like they have to sort of do everything. A house is probably your biggest asset for most people. You paid for it. It has hundreds of thousands of dollars in equity oftentimes.
Well, typically, is there a certain amount of money that the reverse mortgage goes up to? Like you can't go beyond that amount? Is there
It depends on the type of reverse mortgage. There are proprietary mortgages that can be in the millions. But
what about typically?
For the HECM, the one we're talking about, it's about $750,000.
So it goes up to until $750,000.
About that, a little more.
And is there a typical time period also that you're having the reverse mortgage span?
There's no typical time period.
You could do it over 10 years?
You could be paid over 10 years. You could be paid over 20. You could ask for a 10-year payment. Pay me this until I pass away. On the 10-year payments, we use 100 years of age as the number. Most people don't live to be 100. So I think sometimes it's better to say, give it to me for 15 years or so.
What about the 90-year-old guy who calls you and wants to do a reverse mortgage, and he wants it for 20 years? What's your response to him?
Well, my response is, why don't you do it as a 10-year payment? Because the actuarials have you pegged at 100, so you're really getting it for 10, but you're going to outlive the actuarials with a 10-year payment, and you're going to get that money for as long as you're alive.
But would you, if he insisted on 20 years, I want it for 20 years, so he's going against the actuarial tables.
He'd probably get less money doing the 20. So I would show him, gee, if we're going to say, if the actuarial tables say you're going to live to be 100, you're going to get more money. And you're going to outlive these actuarials because you're taking an annuity, a lifetime annuity really here. It's going to continue at
So
that
you're
number.
going to make it make sense for him
Yes.
where he gets his maximum payout.
Absolutely.
What about, these are all a little bit sentimental. I'm afraid to go against conventional wisdom. This was not how it was done in the past. What do you say to that?
Well,
Because it wasn't how it was done
it
in the
wasn't,
past.
but they've been around for quite a while.
The reverse mortgages
Yes, they've been
have.
over 50 years. And in the past, people sometimes ignored their home equity in part of their retirement. But it's sort of it's a silly thing to do. I mean, it's a substantial piece of your assets, and to combine them into your retirement plan can certainly make it so that your money will last much longer through retirement.
Yeah, the last few things were sentimental reasons, but here's one that's not a sentimental reason. With a reverse mortgage, I'm selling my house to the bank.
Absolutely not. The banks are not in the business of owning homes.
Right.
Banks want to...
Even I figured that one out.
Yeah.
The bank isn't buying your home.
No.
No.
Banks are in the business of making loans and earning interest on that loan. So you're giving you a loan, they're earning interest. You are on that title to the house. The bank takes a lien on the title to make sure that it can be paid back the loan at some future date. But absolutely not. This is your home.
Right. No, I figured that one out.
Well, most people think that the bank's buying the house.
No, the
and
bank
they're
is not buying the house.
They're not buying the
What's
house.
happening is the bank is lending you the money up front.
Exactly.
And that's it. And they're making money on the points, on the percentages.
On the interest, yes.
You must own your home free and clear to qualify for a reverse mortgage.
Again, not true.
Well, what
need-
percentage do you have to own?
It depends on your age. At 62, let's say 50%. As you get older, less, because the older you are, the more money I'll give you, because the smaller amount of time you're going to hold the money. But I'd say upwards of 2/3 of people who get reverse mortgages get them specifically to eliminate their forward mortgage. They're tired of making mortgage payments in their 70s, and the reverse eliminates that mortgage payment.
So you're saying that they're not getting a monthly payment, they're getting a bulk payment.
So they'll, if for instance a person had a $100,000 home and had a $20,000 mortgage, I may give them, the bank will loan them 50% of the value of the home, $50,000.
Even though they've already paid $80,000, they own 80% of that example.
Yes.
They own 80% of that example, but you're saying the reverse mortgage loan will be 50% on the value of the entire house,
The value of the
which
entire
is
house.
$100,000.
Yes, but at the closing, if there's a $20,000 mortgage payment there, that's taken care of at the closing, because the bank wants to be in a first lien position. So we'll give you monies to pay off that mortgage, but it has to be paid off at the closing. So the person in effect is left with $30,000 because they've had to relinquish that old mortgage.
And the closing is defined as when you take out the reverse mortgage.
Yeah, when you sign the paperwork to get the loan and everything is legal.
Got it. You could outlive the reverse mortgage. Wouldn't that be to your advantage?
Well, you can't. First of all, you can't outlive it.
You can't outlive it?
Because it has no time limits.
Well,
You can outlive the payments. If you
You can
chose to get payments for 10, 15 years and you live for 20 or 30, yes, you would outlive the monies that you received.
so you wouldn't receive any money after the contracted amount of the reverse mortgage.
If you chose, and you can make that choice. I want it in a 10-year payment, which is, lifetime. I want it in a term payment of 15 years, 10 years, and you'll get your money that way. Now, you can change how you want that money paid to you at any time, but you can outlive that piece of it. But once the monies have been given to you, you're still, that house is your house as long as you want to remain
So I
there.
can still live in that house.
Absolutely.
So I had a $100,000 house. I had paid $80,000 into it. The reverse mortgage will give me $50,000, and I've already paid, the reverse mortgage has already paid me the $50,000, and I live another 10 years. I will get no income in that extra 10 years, but I can still live in the house.
Absolutely.
Okay, I'm getting it.
All right.
The homeowner pays taxes on reverse mortgage proceeds because money's coming in.
Yeah, no. The homeowner does not pay taxes on any reverse mortgage proceeds because when you bought that house, when you got paid a salary and you paid the bank every month their original mortgage payment, the monies that you gave to the bank to pay your mortgage had already been taxed. Well, so these are after-tax dollars that you bought that house with.
The other way of looking at it, and correct me if I'm wrong, is it's not income. When the reverse mortgage is paid to you, they're not paying you income. What they're paying is it's a return of capital.
Exactly. It's
another way of expressing
it's a return of capital.
Right.
I like the way you put that. It's not income.
It's not income.
It's not income.
Right. There are large out-of-pocket expenses.
No. To get a reverse mortgage, you have to pay a counseling fee, which is typically $125.
What's that, a counseling fee?
So to get a reverse mortgage, and it's the only, I think, product on the planet that you actually have to go to a third-party counselor that has been licensed and to do this by the FHA, and you get loan counseling, which basically says, do you know what you're doing? This is a product that's usually aimed at seniors, and they want to make sure that the seniors are not being taken advantage of and they know what they're doing. So the loan counselor basically goes through with you all the aspects of the reverse, why you're doing it is a good thing for you.
And where are these loan counselors?
They're located all over the country, all over the state. Some are you can do it in some states by phone. Some states you have to do the counseling in person.
Do they work in a bank? Or?
They don't work for a bank.
They don't work
for banks. They're independent. They have to be very independent and not connected with any banking organization.
Any financial institution.
Yes. So they're totally neutral, and they're there to make sure that you understand what you're doing and that they feel comfortable that you understand what you're doing.
They have to sign off on it.
And they have to sign off that this person understands what they're doing and is capable of making this
I
transaction.
never heard of that. I never heard of that. Okay.
The only thing I think on the planet that you need counseling for that way.
What about Social Security and Medicare will be affected?
Again, it's not income. Return of capital. It has nothing to do with Social Security and Medicare. Will not affect them in one way.
What about Medicaid?
Medicaid it can affect. Medicaid has limits on what types of monies you can have in accounts, but that doesn't preclude you from getting a reverse when you have Medicaid. You need to speak with your elder attorney or financial planner, and they'll show you how to go about doing it.
But as far as Medicare and Social Security, it will not affect it?
Not affect them.
Okay. We were talking when we first started that a reverse mortgage, there's a lot of people don't know what it is.
Yes.
And there's people who are saying a reverse mortgage is similar to a home equity loan.
There are some similarities, but the similarity is both of them use your home's equity as collateral. That's where they basically differ. A home equity loan, at any age you can get a home equity loan. At a reverse mortgage, you have to be 62 or over. A home equity eventually requires a repayment, a monthly repayment. A reverse does not require a monthly repayment.
No, it's the exact opposite. They pay you
Yes.
based on the equity that you have in your home.
Yes.
So we've been talking about this reverse mortgage, and we've tried to eliminate some of the fears and some of the misconceptions. Is there some misconception that I haven't asked you about that you have heard that's strong?
Oh, goodness. The fear, people have the fears that they can be thrown out of their home. We talked about that. They fear that the bank owns their home. It doesn't. taxes are always the big issue, and that's with a reverse or without. You have to pay your taxes.
And you have to pay insurance.
And you have to pay insurance. Other than that, I mean, we'll get to some more of them in
So
time.
what are we going to be talking about in the next show besides?
We'll start talking about the mechanics of it, so people get a better understanding of how it actually functionally works. This show, I wanted to sort of have people ask questions or get their questions answered about the things that we hear all the time. I mean, when I ask some professionals about reverse mortgages, the first three things they can tell me are usually false. People just don't know.
I can see how this can be very, very confusing.
Yeah.
But I think we've explained it somewhat to the visiting audience. And we've been talking to Mike Sloan from Mutual of Omaha. We've been talking about reverse mortgage. And as you can hear, it's a complicated topic, but it does make sense for anybody who's over 62 and is a senior person and who wants to take the equity in their home and use it as for living expenses now. I'm Pat Kazakoff. We'll see you next time, and we'll talk about the next level of reverse mortgages and how the mechanics work and how you get, indeed, a reverse mortgage. Thank you very much, Mike.
Thank you, Pat.